Now, financial independence is something I think most investors, especially dividend investors, are interested in. Now, speaking for myself at least, financial independence was one of the main reasons I personally started investing in the stock market around a decade ago, and is still the main driver of why I consistently buy into assets like stocks and ETFs to this day. Now, if you're interested in the idea of becoming financially independent and even perhaps retiring early, then today's video is going to be especially interesting to you. And that's because we are going to be going over and looking into two rather new ETFs that could be useful in the pursuit of reaching and or sustaining financial independence. The ETF's ticker symbol FIRS, or the FIRE Funds Wealth Builder ETF, and the more income-focused one, ticker symbol FIRI, the FIRE Funds Income Target ETF, are two ETFs I promise you guys are going to find interesting. Now, FIRE Funds, which was created by Tidal Financial Group, is sponsoring today's video, but just to be clear, as always, I am not being paid to say anything good or bad about these ETFs, but instead just to share some of the facts about these ETFs with you guys, tell you what these ETFs have to offer, and then towards the end of the video, I'm going to give you my personal opinion on these ETFs when it applies to my specific investing strategies. So again, if you consider yourself an investor who's interested in the idea of financial freedom and retiring early, then make sure to stick around until the end. Now, heading over to fire-etfs.com, you guys can of course go there too and see all this information yourself. It first says we get FIRE, then it says the FIRS ETFs designed specifically to help support the FIRE community. Now, for some of you guys watching, you might not necessarily know what the FIRE community even is, but I'm sure a lot of you guys have heard about it or even sort of aspire to be a part of it because you're probably a dividend investor. Now, it says, what is FIRE? The Financial Independence Retire Early is a financial lifestyle and philosophy focused on achieving financial freedom at a younger age through a combination of aggressive saving, smart investing, and mindful spending. The goal is to accumulate enough wealth to support one's living expenses without relying on traditional employment, allowing for early retirement to shift to more fulfilling pursuits. Now, like I said, for me personally, like a lot of you guys probably already know if you've watched my videos in the past, I've been trying to build out a long-term portfolio to get to the point to where it pays me more than enough dividend income consistently on average on a monthly basis to where all my bills are covered. Now, I actually reached that point a few years back, which is amazing. And although my portfolio now can sustain my lifestyle to some degree, I'm still adding more and more shares to my portfolio just to sort of plump things up a bit. But this was 100% a massive goal for me personally, and it feels absolutely amazing that after a decade or so of aggressively saving and investing, I personally have been able to get there. Now, it then says FIRE Funds, or the Wealth Builder ETF, again, ticker symbol FIRS, and FIRE Funds Income Target ETF, ticker symbol FIRI, are two complementary funds designed to support these goals. FIRS aims to diversify across 4 ETF baskets, targeting different market cycles: prosperity, recession, inflation, and deflation, to negative economic fluctuations. FIRI is an actively managed fund seeking current income with a target of 4% annual income level. Both funds are structured as ETFs seeking to offer liquidity, transparency, and tax efficiency to support flexible approach of FIRE investors. Now, it's no secret that as of the last few years, there's so many new ETFs coming out that offer different strategies, potential outcomes, etc. But the reason these ETFs got my attention, these FIRE ETFs, is obviously, like I said, because I personally align a lot with the FIRE community. I love the idea of getting to the point to where you can start enjoying life a lot earlier and not necessarily having to work, because honestly, life's too short. Now, we're going to go over both these ETFs, but the main one that I find most interesting personally is FIRI, or the FIRE Funds Income Target ETF, and this is because, you guys guessed it, I'm more of an income dividend-focused investor. So although the FIRE Funds Wealth Builder ETF is also super interesting, and we're going to talk about it, FIRS, which also is pretty cool. But for the FIRE Funds Income Target ETF, it says Fund Summary. FIRI is an actively managed fund designed to seek current income with an aim to provide a 4% target annual income level, tailored to align with the financial independence and retire early lifestyle. Now, FIRI offers a potential income stream to support financial goals. Delivered through an efficient ETF structure, this ETF aims to offer liquidity, transparency, and tax efficiency, providing a flexible option for those interested in income-focused investing like myself while working towards long-term financial independence. Now, without wasting any time, looking a little bit deeper into FIRI, or the FIRE Funds Income Target ETF's fact sheet, it says right here, once again, the investment objective and strategy, which is very important to understand when it comes to investing into any ETF, of course, because this is more or less what the ETF is trying to offer. Fund is an actively managed ETF that seeks current income. In particular, the fund seeks a 4% target annual income level. The annual 4% target. The target reflects the distribution of income generated from dividends, interest, and other earnings, such as those from real estate or derivatives, and excluding capital gains from asset sales. It represents the anticipated recurring income produced by the fund's underlying assets. Now, for the FIRE community, there's of course the 4% rule. I'm sure you guys have heard about this, especially if you're this deep into investing. But this fund really takes sort of an interesting approach and is seeking to offer a 4% target annual income level. Now, the investment approach says the fund employs a barbell approach in implementing the fund's investment strategy, balancing two components. Number one, high-yielding assets. A portion of the fund's portfolio is allocated to underlying ETFs that invest in higher-yielding assets and financial instruments. Then next, it says cash equivalents and low-volatility ETFs. The remaining portion of the fund's portfolio is invested in money market funds, low-volatility ETFs, ETFs that aim to reduce risk and provide stable returns, or directly in cash or cash equivalent securities. This allocation aims to provide stability and liquidity, allowing the fund the flexibility to tactically increase its exposure to higher yielding assets when, in the advisor's view, market conditions are favorable. It then says the advisor seeks to optimize the balance between risk and return by allocating the fund's portfolio between two primary components: high-yielding assets, which generate income, and cash equivalents, which focus on capital preservation and liquidity for tactical opportunities. Now, right off the bat, what I personally like about this ETF so far is that it basically does everything that most investors that are living the FIRE lifestyle are kind of doing on their own, but this is sort of a one-stop product that kind of does it all for you. Now, more information about the ETF. The AUM is just over $1 million. It started trading in November of last year, so again, it's relatively new. The gross expense ratio is 0.89%, and the net is 0.7%. Now for FIRI, some of the top holdings are things like the Robertson Alternative Yield Pre-Merger SPAC ETF. Then we have ticker symbol MSTI, which is around 20.32%. Then we have things like RISR, VETZ, and even names like FIAX. A nice mix of different names that offer some yield, but also some stability. Now looking into the FIRE Fund's Income Target ETF's performance on the max time frame, it is down as of right now. I'm filming this on March 13th. It's down around 4.3%, but again, the rest of the market, everything in the market as of right now, has had quite a rough year. Now, year to date, it's only down around 1%. Now, to be clear, this performance does not include the dividends that FIRI has paid so far, which so far have been 0.481 cents, then 14.8 cents, then just over 20 cents per share. Now, even though I'm much more of a dividend income focused investor, looking into ticker symbol FIRS, the FIRE Fund's Wealth Builder, it says right here under the fund summary, FIRS is an investment product designed to support your journey towards financial independence and retire early or FIRE, with a focus on resilience and potential growth across various market cycles. FIRS seeks long-term capital appreciation and diversification across 4 strategically constructed ETF baskets that align with prosperity, recession, inflation, and deflation conditions. This approach seeks to position your investments to respond effectively to changing economic environments. Delivered through an ETF structure, FIRS aims to provide transparency, liquidity, and tax efficiency, offering a streamlined option for those looking to align their investments with FIRE goals. Now, digging into the fact sheet for this Wealth Builder ETF, it says the fund is actively managed and seeks long-term capital appreciation. So again, guys, this one's going to be seeking much more long-term capital appreciation, going to try to actually grow a little bit faster compared to the other one that's going to be much more of an income-focused, lower volatility ETF. And depending on what you're looking for, if you are more growth-focused or more income-focused, I mean, either one of these ETFs could be great options to look into. It says this ETF invests its assets in shares of other ETFs and, to a limited extent, other exchange-traded products like ETPs. The fund primarily invests in affiliated ETFs managed by Title Investment LLC, the advisor, but it also can invest in unaffiliated ETFs and ETPs, collectively the underlying ETFs. The fund will not invest in ETFs that are also structured as funds of funds or in ETFs that invest in more than 10% of their assets in other investment companies and private funds. Now, the investment approach, again, very important to understand when it comes to any ETF, including this one. It says the advisor allocates the fund's portfolio or baskets of underlying ETFs designed to track the behavior of 4 distinct economic regimes. Each regime generally represents approximately 25% of the fund's portfolio. The 4 regimes are prosperity, recession, inflation, and deflation. On a daily basis, the advisor evaluates each of the underlying ETFs, considering their performance, track record, investment philosophy, and performance consistency, and adjust the fund's portfolio in an effort to seek to produce optimal results for the fund. The advisor utilizes proprietary software to monitor specific metrics for each basket component of the fund's portfolio. If any of these metrics move outside predetermined target ranges, the fund's portfolio manager may adjust the fund's portfolio by reallocating assets within the existing baskets or replacing a basket component with an alternative underlying ETF. Now, some of the top holdings are names like SFY, which is 11.09% of the fund. Then we have SPAX. Then we have MSTI. We have MAGG. Then we have some Bitcoin. We have some gold exposure. I mean, there's some names in here that definitely have some growth potential, in my opinion. Now, looking into the performance as of right now, again on March 13th, ticker symbol FIRS is down around 3.48%. And again, year to date, it's not down all that much whatsoever, down around 0.65%. But again, both these ETFs are relatively new, so it's going to take some time to really see how things play out longer term. So now that we talked about FIRS, the Wealth Builder ETF, and of course, my personal favorite out of the two, FIRI, the Income Target ETF, I share with you guys what these ETFs are, how they work, what they're trying to achieve in theory, etc. I lastly want to give you guys my opinion on both these ETFs and if I personally would buy into them. Now for me personally, because I'm looking for more exposure to more income potential and a little bit lower volatility, I personally for my portfolio would be interested in adding the Income Target ETF or ticker symbol FIRI. I like the fact that this ETF is sort of a one-stop shop for really everything you're looking for as someone that's interested in the FIRE philosophy, but again through an income-oriented strategy. Now on the other hand, FIRS could be great for someone out there that does want some exposure to a little bit more growth potential, but again, just for me personally, what I'm looking for, I think FIRI could be great to add to my portfolio. Now again, you could of course build out your own portfolio and try to sort of accomplish everything that both these ETFs are also trying to accomplish, but that would of course be a lot more work on your part. On the other hand, you could pay a 0.89% gross expense ratio or a 0.7 net for FIRI, or an even cheaper expense ratio, 0.67% gross or 0.48% net, and basically get exposure to everything both these ETFs are doing for a relatively low cost. Now, most importantly, before I go, I do have one last question for you guys down below. If you're interested in financial independence and potentially retiring early, are either one of these ETFs interesting to you? And if so, which one of these two are your personal favorites? Let me know in the comments down below. If you guys enjoyed this video, make sure to please drop a like on it. And as always, subscribe for more future content like this.